Hello and welcome back. This is Jan Kotzier, also known as Bear Bully. I have received Monte Carlo reports from ProfitAlgos. His link is in the description, and remember that you can get 20% off if you use my code at checkout. In this video, I will present a summary of the Monte Carlo reports, and we will then go over how to use the information in there. In evaluating the algos, we're going to look at three questions. The first question is the algo up because the market is up? You know, there's a saying, a rising tide raises all boats. The second question is which algo delivers the most bang for the risk that it takes? We use the Calmar ratio for that. So the third thing that we then therefore have to consider, understand the weaknesses of the Calmar ratio. We answer the first question by looking at if the algo is able to outperform the index that it's trading on. I have highlighted or calculated performance, the outperformance against the index that it's traded on. I had to add back into the profit the funding costs because I don't know what the funding cost is of holding the trades. You can see that there's 6 algos from ProfitAlgos that actually outperform the market. It's these dark green ones. I haven't seen any provider providing us with algos that are able to outperform the markets. You will also notice that there's 3 lighter green algos where it's slightly in the negative. I'm going to give these algos the benefit of the doubt because number one, we know that holding costs would have been a lot higher in the buy and hold strategy. And then on top of that, you get the benefit of the algo managing your trades for you. So now that we've identified the algos that we are most interested in, we will look at the Calmar ratio. How will we structure our capital allocation between the algorithms? Which ones of these require a little bit more explanation? So you will notice here that I've got 4 algorithms with really low Calmar ratios. And it's a little bit counterintuitive because 3 of them were actually quite good in their outperformance against the market. So what's going on here? You will notice that all 4 of them have got the higher time frame trading strategies. You'll notice here that 2010 and 2012 is when the trades were taken, where all the others had much more recent start dates. Now the Calmar ratio it's calculated by looking at the annual P&L in this instance, and then divide that by the drawdown. Now, the drawdown is an observation that is the worst drawdown that you've seen, and most of the time that will be very recently downs because of the growth in the index itself. The annual P&L, which is obviously an average of all the P&L over the life of the algo, will have been averaged down, if you will, with the initial years when the index didn't have such large values as it might have now. So to that end, I've also calculated the Calmar ratio using the profit after fees column. And this takes the entire gain of the algo over its life and then divide that by the drawdown. And then you can see much healthier Calmar ratios coming out. Now this has got a counter negative as well because it means that Algos that's been running for longer has had more time to build up profit, and as a result they are benefiting over shorter time frame algos. So that actually makes this DAX 2M stand above all of the others and also the NASDAQ 3M. So really, really strong algos here. So as you can see, when we evaluate algos, we have to look at more than one thing, and one single metric doesn't tell the whole story. There is a solution for the weakness that we've discussed with the Calmar ratio, which is that you should be calculating these metrics using relative measures, and there is actually a formula called the MAR ratio, MAR, that can be used instead, and we will cover that in a future video to see if that tells us anything different. But for now, I'm quite confident to run with these algos that I've highlighted in colors, even the yellow one here, because you can see here that the DAX 2M actually hasn't been able to outperform. However, over such a short period of trading, it's obviously been compromised by a really outperformance of the DAX over recent times. When it comes to currencies, we have to approach it slightly differently to determine how the outperformance is calculated. We need to identify the stronger currency in the pair and then assess if the algo had grown the equity faster than the growth of the performing currency in the pair. So we will just do the maths. I'll show the buy and hold profit calculation on screen here. You can see that it just takes the amount of notional divided by the ending rate and deducted with the notional divided by the starting rate. And that gave us 11,636, but with a profit of 21,848, we had outperformance of 10,417. All right, so that's a wrap, and see you next time when we build the portfolio.